A small business had assets of $110,000 and liabilities of $40,000. Define the term owner's equity and state the owner's equity of this business. The definition of owner's equity is the owner's residual interest in the assets of the firm after the deduction of liabilities. So what we can do is express that in the accounting equation, whereby our assets must always equal our liabilities plus our owner's equity. Looking at an example, you can do this for an entire business. You can do it for one department of the business. You can do it for any asset you buy, whether it's a mobile phone or, in this case, we'll do it with a pair of shoes. Let's say you need $200 for a new pair of sneakers, but you only have $50 in your bank account. So we want a $200 pair of shoes. So to make up the difference, you go to the bank and get a loan of $150 to be repaid by the end of the year. Looking at what our accounting equation, we've got a $200 asset in the form of the pair of shoes. We've got a $150 liability because we actually owe $150 to the bank. And that would mean our owner's equity was $50. That's our residual interest in the shoes. So one way of looking at that is we could say that we can express it another way and look at it as owner's equity equals assets minus liabilities. So the accounting equation can be expressed either of those two ways. Applying that to the shoes, we said we had $200 shoes as an asset, but we take out the $150 liability to the bank, which means our owner's equity was $50. So what's interesting about that is to look at, well, what does that actually mean? It actually represents what you own of the assets. So looking at the shoe, we've got $50 owner's equity of a $200 shoe. So basically what that means is you own 1/4 of the shoes, or $50 worth of the asset. But that must mean somebody else owns 3/4 of the shoes, and that would be the bank. The liability on that pair of shoes of $150, the bank actually effectively owns 3/4 of those pair of shoes until you pay the bank back the money. Let's try and answer this question, which was define the term owner's equity and state the owner's equity of the business. So the definition was the owner's equity will be the owner's residual interest in the assets of the firm after the deduction of liabilities. And in this case, the calculation, we took $110,000 of assets, we took out $40,000 of liabilities, and we ended up with owner's equity of $70,000. So it didn't matter whether it's a $200 pair of shoes or a business with assets of hundreds of thousands of dollars, the calculation's the same, and we're going to put that down in our box next to owner's equity. Looking at our marks, we've got 2 marks, one for our definition and one for our calculation.